And joining me now to discuss the results of Gyeongju, David Blanchflower, professor at Dartmouth College and a former BOE policymaker. Hello. David, hi, thanks for joining us.
Good to see you.
David, I suppose we can all sleep better now, can we? Now there's going to be no more competitive devaluations.
Yeah, I believe that one. I just think this looks like kind of the weakening of G20. There was all this agreement in 2008 that they would act for stimulus, and now that agreement's breaking. The fact that you can make an agreement or can't at G20 doesn't really mean anything. The US clearly is going to go down the road of more QE with the intention of pushing the exchange rate down. So no matter what the agreement, you're just going to proceed. And countries like the UK benefited from being able to lower the exchange rate, and those like Spain, Greece and Ireland didn't. So the fact they made an agreement or didn't, I think, is completely and utterly irrelevant.
What's the end game of this, David? I mean, people looking back to the 1930s, protectionism, trade barriers and so on. Are we heading that way?
Well, that's the worry. The problem is when you go around the world, as I've been, what you hear is that everybody thinks they're going to export their way out. Who's exactly going to buy, I don't know. And the problem is that growth is really very, very sluggish. And so you've got to somehow or other get growth. The real big worry is that we'll see moves to protection. And countries want China to buy their stuff. And as they're not, this is a big worry. So all the consensus in 2008 is breaking up, and you see the UK going into this huge fiscal austerity mistake, and they need exports to come and help them, and they are not. So this is, the world's now in a new economic crisis.
I mean, did Geithner have a plan? I mean, the plan to, have surpluses or deficits within a certain limit. It didn't really take on, but did you like the idea of that in essence or not?
Well, it's sort of strange the US comes along and tries to have these limits. I mean, let the market go. I mean, this is really all about trying to get the Germans and the Chinese to allow their exchange rates to move and start to buy things. I mean, the Germans are in the ECB, they're a part of the euro area, and that's keeping their exchange rate down, and they're able to sell goods. If the Germans were to leave, the market would appreciate. So exchange rate movements are really important, but to expect that this G20 was going to do anything, I think was kind of naive. I mean, I saw the Geithner letter. I was just very unimpressed by the whole thing. Seemed like a complete waste of time to me.
Does that mean that next month's G20 Leaders Summit, David, is a non-event waiting to happen, or might something more concrete come out of that?
I wouldn't bet much money on anything concrete coming out of it. I mean, you need. Think about the Chinese said that they would allow the one to appreciate, and what happened? Well, not very much, and I suspect we're going to see more of the same. But this is becoming more of a problem for countries, as I say, like the UK, who need. I mean, Osborne needs net trade to come in really positive, and it's negative. He needs investment to come in, and it's falling, and he needs consumption to rise, and that's falling. So the exchange rate's pretty important. Countries are struggling out of this long recession, and they've got to do something, and unemployment is a problem for them, and they'll cling at anything, but this just looks like posturing to me.
David, get your economic forecasting cap on. We've got UK GDP tomorrow. What's it going to be like? Some say maybe a third of the previous quarter's number. What do you reckon?
Well, I've actually written my column for this, one of my columns for this week. I've penciled it in. I'm not going to tell you what it said, but I think it's obviously going to be a lot lower. 0.4 doesn't look crazy, although I suspect it might even be lower than that. But I have a little bet, which other people aren't really talking about, which I suspect Q2 is going to get lowered. The 1.2 just didn't look believable. It was driven by construction, and all the construction data, the survey data and everything are consistent with that. So I wouldn't be surprised to see Q2 get revised down, and this number's going to be pretty weak. 0.4, 0.3, 0.2, that kind of number.
There you go, David. You heard it here first. Thanks a lot. Speak to you soon. David Blanchflower there. Let's get